Friends, in this video for I Thought Wealth, I am going to talk to you on the topic finding value. In this market context, how difficult is it to find stocks which are attractively valued, where the risk reward is in our favor? Is it a market where everything is expensive? Is it a market where finding good or great businesses which are relatively not expensive is next to impossible? In every market context, there will be great businesses which the market will not want to buy for near-term reasons. For example, just a few months ago, auto stocks, businesses with proven capability, world-class infrastructure and products, with the ability to export to anywhere in the world, with technology, with skin even in the EV game, were not seen as good investments because the markets thought that some unknown is going to come, disrupt EV and throw all the existing ICE players out. But what are the odds of such a thing happening? If you look closer at what businesses which dominate the existing IC engine market are doing in EV, you will be more or less convinced that everybody has some game plan which is sharpening by the day. If a Tata Motors can bring a Nexon in the EV space and impress clients of its capacity to deliver a complete suite of electric vehicle products, why not some other established companies like a Bajaj or a Suzuki or a Honda or even an Acer or a TVS? Everybody has that innate capacity to grow into a bigger role, but the markets thought they would not manage it well. And there you see is an opportunity to buy at the right value even when a good part of the market was very expensive. Small caps, super expensive. Mid caps, super duper expensive. Micro caps, expensive over historic valuations. In large cap, all the performing parts, every part of the market which is predictable was extremely overvalued. In this market, you found that a workhorse, a warhorse industry like auto, for which the need is going to be there for a long time to come, was trading at a valuation which did not reflect fundamentals. I just gave one small example. In 2018, when the small cap stocks were trading at a very high multiple, you could still buy companies like a Bata India or a United Breweries or a USL very cheap. You could still buy franchise companies very cheap. You could buy insurance companies very cheap. Your platforms were all trading very cheap, right? So, in every market context, finding value is possible provided you are not looking at the same place where everybody is seeking to find value. You have to look at a different place. Today you see that you have more than 3 footwear companies at 10,000 crore plus market cap, whereas in 2017, the market leader was at 6,000 crore market cap. So, footwear was in the doghouse. So, in every market context, even today while we speak, you can find value. 2 years ago, capex related companies, what we call as fast moving industrial goods, your consumables, were all trading at a very low valuation. Yet, people were not willing to buy those companies. 2 years ago, tech valuations were extremely low because market did not factor in growth. And when growth happened, markets factor in growth like the growth is forever. So, we need to buy when the markets are not factoring in growth, and we probably need to think of selling when the markets think the growth phase is forever. In every economic cycle, there will be some point in time for every sector or every theme when the markets think it won't grow well enough to justify a higher valuation. When the markets think a higher valuation is not merited, it starts selling and it actually makes the valuation even lower. and you start getting the same investment even cheaper than what you thought is cheap. This happens all the time. Even now, it is happening in parts of the market where market thinks good things won't happen for the foreseeable future. And then, as events unfold, you find that the time horizon you gave for good things to happen was not judged well by you. You think it will be shorter. And then the markets see that it will be shorter. And then the markets think it's very near. And then the valuations blow out. This is typical of every theme, every cycle, every market context. And you need to be the one who's willing to find value when others are not looking, seek that value where others are not looking, capture that value when others are not investing, and capture the growth in value till others keep running after you to sell your investments to them. So this is typically how you counterintuitively look at everything, find opportunities, do your math and participate. This is not something which is exclusivist. Anybody with a questioning bent who wants to do things diligently can outwit the whole market. You can outwit the smartest people whom you today worship. There is nobody you cannot beat at this game, provided you want to be the winner. You badly want to be the winner and you are willing to work to be the winner. So that in essence is how you find value, you capture the value and you participate in discovering that value and creating greater value for others to buy from you. That in essence is what I want you to think about in this context, in this market context, in this economic context and in this investment context. I am sure you know there will be enough places to look for value when others are not looking there. Thank you very much.